All right, you guys, I want to welcome you to the Profit Zone, the Trading for Profits class. I'm Angela Williams, CEO Infinity with my econ. We are on session 4. This was a 4-week class. We are now in the 4th week. We're going to obviously go over the trade plan because we go over it every week. I'm going to share a quick little checklist. Make sure you understand the numbers and the money potential that you have if you take this serious and practice, 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 practice. And then we're going to go ahead and we are going to launch the contest. We are definitely about to launch the contest. So again, I'm not a financial advisor. Will not tell you what to invest in or pick stocks for you. This training is for educational purposes only. Please be aware that all trading transactions can result in potential loss, and you should only be trading with disposable income and not leverage more than you can afford to lose. You may not discuss, share, reproduce, copy, reprint, modify, rewrite, create, distribute, publicly display on social media, publicly perform, license, or sell content retrieved or learned from this presentation without the express prior written permission of myself, Angela Williams. The Profit Zone class is by invitation only, so if you know anyone who is interested, please let me know. Okay, before I get into today's session, like before, I wanted you guys to understand that the trade strategy that I gave you with these Bollinger Bands can be a universal plan. So what I mean by that is you can also use these Bollinger Bands and you could look up any stock in the stock market, and just by looking at the Bollinger Bands, you would know if it is a buy or not. So this is actually an example of Microsoft. And so you can use Bollinger Bands. I also use moving averages and trend lines and different things. But I just want you to see how what you have right now, the chart you have right there, right now, if you were to just look up a ticker symbol, it's going to populate and you're going to be able to look at it to determine, again, is it a buy or should I pass or should I sell? Okay. So if I pulled up Microsoft using these charts, the first thing that I would do is I would look at a 5-year chart. So up where it usually be like the time frame where you would probably see 15-minute or 5-minute, you can actually select a daily chart and you can select a 5-year, 1-day chart. Now, you're not trying to look and get close on a candle. You're trying to see a bird's eye view. And what you want to know is when you pull up that stock and you look at a 5-year trend, is that stock in a uptrend or is that stock in a downtrend? And so how would you know? If you pull up a 5-year for a stock and you see how the price action starts from the bottom left-hand side and then it goes up to the top right-hand side, that's letting you know that that particular stock is in an uptrend. Now, if you pull up a stock and it starts up at the top left and it's going down to the bottom right, then that means that that stock is in a downtrend. If the price action is just moving sideways, then you know that that stock is in a sideways movement. So the only position that a stock has to be in for me to even think about buying is it has to be in an uptrend. So one thing you want to do, like I said, is look at the 5-year. I can also pull up a 15-year. And the reason why I might pull up a 15-year is because I want to know, can that stock withhold a recession? Because we've already been through a recession. So if I could pull up a stock for 15-year or 20-year time period, and it literally continued to go up even during a recession, then obviously that's a stock that I will want to own, especially if I'm doing a long-term investment plan. So if you're building your retirement account, you want to look at 15, 20 years. If you're looking at something that maybe you just want to hold for a year or less, you could do a 5-year. Okay, so after I look at the 5 year, the next thing I want to do is I want to look at a 1 year. So the 5 year may be in the uptrend, but let's see what has happened in the last year. And so on the right hand side, I would pick the time frame of 1 year, 1 day. Is the stock still in the uptrend? Yes. What I noticed is probably about right here, there was a pullback. It wouldn't fall lower than that, and then it just proceeded to go back up. That is something that I would notice. And so by looking at this, I would draw a line for if the price ever fell back and hit that point, I would definitely buy more and get back in the trade, or double my position, depending on how long of a trend. If you're trying to hold it for the next 10 to 15 years, you're not going to sell just because it went low. You're just going to buy more at a lower price point. So by looking at Microsoft, the 5 year and the 1 year is going in an upward trend. So if you see a stock in the 5 year going up, but in the 1 year is going down, then that may be a stock that you might want to put on a watch list, but it's not something you're ready to buy right now. Okay. So once I decide, okay, this is a stock that I want to invest in, the next question is, when am I going to buy? When is a good time for me to buy? And so the next thing that I would do is I'm going to switch my time frame to a 3-month, 1 day. So what it's going to do is show me the price action for the last 90 days. And what you're going to be able to see is you're going to be able to see some support, and you're going to be able to see some resistance. And support is when the candles are falling down, but for some reason it seems like it's hitting the floor. It bounces off this level and it pushes back up. So if you look at this, it bounced on this level, it push up. It bounced down on this level and it pushes up. It keeps coming around this level and pushing up. It bounced down, hit this level, and it pushed up. That's a floor, AKA support. So I would draw a line here and then write what that price is. That price is 134. For some reason, when it bounced off the 134 price and it moves up, it seemed like it started hitting 141 price range, and then it'll fall back down. Hit it again, and then it will fall back down. So I would draw a line right here. This is when price moves up and it hit a wall and fall back down, and it keep testing that wall and it falls back down. That is called resistance. And so we got a resistance line and we got a support line. And so what this is telling me is that anytime it hit 134, I want to buy. Anytime it hit 134, I want to buy, because every time it hit 134, what does it do? It push back up. Okay, Microsoft ain't hit 134 yet again, but what it has done is hit here, which is the 141. But look what happened. It kept testing this ceiling, and then eventually, usually after 3 times of price action trying to hit a ceiling with enough demand or volume, it'll break through the ceiling and push its way back up. So it pushed up past this 141 and it went to 144. Okay, then it went to 144, and then next thing you know, it just started to take off. And this is actually an old chart, because I think Microsoft went all the way up to what, y'all, 190? I think it went all the way up to 190 or something like that. And just imagine, I got in positions at 134 and 98. So that's why it's just always a matter of looking at your stocks. But once you draw these out, when Microsoft fell back down because of this this market crash, where Microsoft went under 148, was like 144, 141, people gonna jump in and grab it because they know what it does. Okay, if it ever gets to 134, get in it. If it gets to 141, get in it. If it's at 144, get in it, because Microsoft is a solid company and it's going to always make its way back up. Okay, now if I was buying stock options where I'm only trying to hold a position for maybe no more than 3 months or something like that, I would have did a call where I did put in an option for a call right here at 134 because I expect the price to go up. So you would do a call option at the 134 price, and then you want to close out your option right up in here and take your profit from here to here. Or you could have bought the stock, depending on how much money you got to trade with. You could have bought the stock down here and closed out right here. Either way it go, it wouldn't have mattered. You still would have made money. Obviously, you would make more money with options because you can get in the position of a stock at a cheaper price than versus putting all your money on a stock if you don't have a significant amount of money to do. But even if a person was trading stash and they bought $50 of Microsoft, if Microsoft jumped 20 points, your stash is still going to increase 20 points. So it doesn't matter. You get in where you fit in. All right. So if I was looking at this trade and I said, I want to jump in Microsoft when it breaks through this 141, we know this the ceiling. So as soon as it went from here and jumped and crossed this 141, you would have got in position for a buy and then let it push its way on up. Okay. Now, the 90-day is giving you your price points. Okay, I'm looking at 134, I'm looking at 141. So when I say add something to your watch list and I give you a price range, you set up a watch list and you look for the prices. And when it's in that price range, you just go. Okay, now on the day that you decide to go, you probably say, okay, so when do I buy? Well, you're going to pull up your 15-minute chart. So you're going to go from a 90-day, which is going to give you your prices. And then now you're saying, okay, I'm going to get in at this 144. So on the right-hand side, you're going to pull up your 15-minute chart and you're going to expand your candles. And what are you going to do? You're going to get in when you see a hollow candle come from the what? The bottom band. Because remember the Bollinger Bands, you want to buy low so you can sell high. So when you got in? Right there. You got in right there. And actually by the end of pretty much the end of the day, after night session, it went from 46 to 148. So that obviously was like a $2 move, but we do know that Microsoft eventually went on to be like $190 something. Okay. But that's when you know when to get in the stock. So your Bollinger Bands can still help you with any asset class. All you're doing is changing time frames. So when it comes to long-term investment, you're looking at 20-year, 5-year, 1 year. If you're looking for a short-term investment, you're looking at a 1 year and then a 90-day. And then when you're ready to get in, pull up your bands for the day, put it on a 15-minute chart and buy low. Same thing if you were trading Forex. You still can use Bollinger Bands to trade Forex. And so that's why I say if you learn this strategy, you can trade anything. Now, once you do go into the live class, we got other strategies that we use and that you learn. But for the most part, what you have right now, you can still make money in anything. So if I looked at this, this is the EUR USD. This is a Forex currency. And, we got a Forex class that actually is going to be starting next Wednesday. And it's definitely going to make sense. But anyway, let's say you're trading EUR USD. You're going to do the exact same thing you would do if you were trading futures. You're going to sell right here, short on down. You're going to buy right here at the bottom band, go on up. It's in and out. So just like I scalp in futures, I scalp in Forex, you guys. It's the same process. Short here, go all the way down. Buy here, which is a counter trade. It's high, it's hollow red. We don't know if it's gonna go all the way up or break back down. So when we get in, we're looking to get in and get out. Now in this case, we got in, that whole line turned blue. You see how the volume picked up in the system? That's letting you know that it's gonna push through and go all the way up. It went all the way up. You catch 100 points or 100 pips in Forex. Okay, so when you're looking at trading Forex, you're looking at like a 15-minute. You can look at a 15-minute chart and trade Forex. And so you could try it out. You know, you got your charts. You could use your charts to trade anything and to look at anything. And what you'll see is that you could trade anything. So I gave you a universal trade plan. Okay, so again, you got your 15-minute charts on the left-hand side. I got 4-minute here, but y'all trading 5 minutes on the right-hand side. The 15-minute is giving you a view from a higher level. And the 5-minute is basically three of the 5-minute candles make up one 15-minute candle. Okay, so if you're looking at the 15-minute candle and you starting to see a solid green form, then on the right-hand side, you probably see a breakout move to the downside. Okay, now, always pay attention to the trend. Do you see consecutive red candles or do you see consecutive green candles? Always know the pivot points, which right here are baked into your charts. Always be mindful of where price action is to these pivot points, because it will always stall around pivot points. It'll go from this pivot point and price action will move all the way up. It'll get here and it'll stall a little bit. That's what it is. Okay. Always take your trades based on where the candle is on the Bollinger Band. You buying from the lower band, you selling from the top band. The whole line can be used to get out of a trade, not to get in a trade, to get out of a trade. Remember the setup. If you ever see a hollow red candle come out the top band, immediately sell, because that is very rare. If you see a solid green candle that actually go out the bottom band, immediately hit buy, because that is rare. If you see a hollow green candle come from the bottom band, do a buy. That is called the perfect setup. So this here is a 95% REN weight. You do not see this very often, but when you see it, take it. Whenever you see a hollow green candle coming from the bottom band, just automatically take it. Now, that's the perfect setup. Everything else is considered a counter. So if it ain't a 95% win, it's a counter. And a counter means that you have to get in and out. It does not mean that it may go into a trend. You don't know, so you got to wait for it. So if you see a solid red candle, and it's, let's say it's going in a downtrend, it go out the bottom band, it stop, it pause, and it starts to reverse and create a long wick at the bottom, and then it closes right on the bottom band or on top of the bottom band. If the very next candle that starts to form is a hollow red, go ahead and buy. But again, it's a counter trade because it's red. Red means it's going up in a downtrend. So it could go up, pause, and fall back down. So if you get in and you in the green, ring your cash register until you are at a skill level where you can wait for it to see if it break out to the upside. But sometimes if you're not paying attention to volume and things like that, it'll break down on you, go the opposite direction, and you did not close and you are in the red, all right? So always be mindful of the colors. If you see a hollow red, not hollow, a solid red candle start to form from the top band, just go ahead and take it. Go ahead and hit sell. If it continues and it goes into another red candle, that's a trend trade. Just jump on the train and follow it down. Jump on the train and follow it down. Do not try to go against a trend. If you see consecutive red candles, you see the market free falling, don't be trying to buy. Just look for opportunities to sell. If you see a hollow green candle come out the top band, pause, reverse, fall back down and create a long stem, and then it close on or underneath the top band, and the very next candle starts to form a solid red, go ahead and short. If you see a hollow green candle go out the top, pause, reverse, create a long stem, close on or underneath the top band. If the very next candle starts to form a solid green, short, but be mindful, it's solid green, which means it's going down in a uptrend. So it may go down, reverse, and go back up. So be prepared to get in and get out. When you see a hollow green candle going up, 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 and it went out the top band, it starts to create a stem. But when it closes, part of the body is still on the outside of the top band. Then go ahead and do a buy, because the next candle will be hollow green. It will push up some more. Okay, only if the body closes, but it closes outside of the top band, then that is a continuation signal to the upside. Okay, you got 6 days out the week to trade, 23 hours a day. Obviously, you're not trading all that time, but you should be able to find a time frame that you could trade where you could practice. Okay, so obviously there's money between 6:30, 7:30 in the morning, 8:30, 9:30, 2 to 3, 8 to 9:30, and 1:45 a.m. to 3 a.m. You should see some form of volume take place. Have 2 devices if possible, your laptop and your phone, or your laptop and the iPad. I prefer everybody to only be trading from a laptop so that you can see your charts. Do not depend solely on a phone, or you will start losing trades. Make sure you're watching CNBC, because not only do economic news affect the movement, but politics affects the movement. So you always want to be mindful or know what the president is doing. Make sure you verify the trend. Are you in a uptrend or a downtrend or sideways? When you're looking at your charts, if the charts say sideways, do not place a trade. Just look. Look for your perfect setups. Remember, you enter in trades depending on where the candle is forming from. Hollow from the bottom band, buy. Solid from the top band, sell. Do not take trades in between the bands. Okay. Once you are in a trade, you get out of the trade based on the color of your whole line. Okay, so if you are taking a buy and the whole line is green, stay in the trade until the whole line turns red. That'll just allow you to get a little bit of money. But Mike, keep doing what you're doing. In and out, keep doing what you're doing. I don't want you to do nothing than what you know I do. Okay. No more than 2 trades a day, because over trading will lead to losses. And once you trade in live, you're paying commissions every time you take a trade. So if you're losing, you're paying commissions on top of that. So I want people to be disciplined in mastering 2 trades a day. Even if they're 2 losses, close your laptop, come back the next day, take 2 trades so you can win your money back. Best days to trade, obviously you could trade Sunday through Friday. The markets close at Friday at 3 p.m. Central Standard Time. They are closed Friday night. They are closed Saturday. They open back up again Sunday at 5 p.m. Central. But the best days where the most money is Monday, Thursdays, and Fridays. Now, I do not trade on Fridays. Fridays always take my money, so I do not personally trade on Fridays. But pretty much Monday through Thursday, I get it in, okay? Now, just looking at the market cap today, if you look at the chart, the market pretty much was in a bull run first thing in the morning after a crazy unemployment number, but it went and shot up, okay? You saw a MACD signal right here. Like I said, I usually don't trade when at the open at 8:30. I usually wait to 8:45, because usually at 8:45, the market will make a move in one direction. So if you look at 8:45, it is start to form. So even though you got a MACD signal to go, I like longer bars, because the longer the bars, the more money comes in, okay? So when I see this signal, it's just telling me pay attention, a buy opportunity will be coming up. And so I'm just gonna wait for it and wait for it and wait for it. And then right here, if you see this Bollinger Band percent, it was under the 50. But then it started to push up toward this, toward this 50 line. Let me go back. It started to push up toward this 50 line. And you see how the bar went from dark green to light green? When it's light green, it's letting you know that the money is there to push it in one direction. And so look, you see the bright bar, hollow green candle coming from the bottom. Even though it's not touching this bottom band, it's not touching because there's a lot of money in the marketplace. So the bands are pushed out to let you know it's money in there, right? But I see a hollow green candle. I did a buy. The whole line eventually turned green. So I'm gonna stay in my position. I'm gonna stay in my position. I'm gonna stay in my position because your MACD, you see how I get the bright greens? The bars are getting longer and longer. That's more money and more push to the upside. So green, 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 green. Now, most of y'all, I know once it got here and you start to see that solid green candle form, you to close. I know I would have. I went ahead and closed. This here, from here to here, was a 77-point move. I mean, yes, 77 points. That was a $3,850 move if you were trading one contract. That also could have been a $38,000 move, depending on how much money you had in your trade account. And all of this happened in 45 minutes. So in 45 minutes, $3,800 could have been made by just taking this first move first thing in the morning. So you could have made this money, closed your computer, and went on about your day. Okay, I was asleep, so I missed this move. Then you see, I said a hollow green candle that closes on or underneath the top band, which is right here. If the next candle starts to form a solid green, go ahead and take it. But keep in mind, it is a green candle, so it could reverse and go up on you, but it didn't. It went on down, but you'd have been selling up here at the top. Don't let the candle form and then do the sale. You do it as soon as you see it. It makes it so much easier. And especially after a solid move at the top like that, it's going to pull back a little bit. So solid green that eventually turned red and went here. Okay, now, once you was in this trade, you see how the whole line turned red. You could have stayed in the trade even though you would see it go up and go down, but it was still red, and went down some more actually. So you actually could have caught it from here and went all the way down there. But I know for most of you, you're gonna go from here to here or here to here. It doesn't matter. Either way it go, it would have been money. Then the market started moving sideways. The market started moving sideways. The reason why, you see how the bands was far apart right here, and then it started to turn down and pull in, turn up and pull in. That's letting you know that the money is starting to leave the system. So if you go down and you look at this Bollinger Band, you see how it was up high and now it's starting to fall down. That's letting you know the money was coming out of the system as well. And so when I saw this MACD sale, I'm going to ignore it. And the reason why I'm ignoring it is because the bands are closer together. I don't want to trade when the bands are closer together. So then I got another signal that said go up. Well, I'm not taking that one either because the market is still kind of moving sideways. Now this one, even though it was kind of tight as far as a squeeze gone, you could have did this one and did a quick in and out only because this was a reversing candle. This was a spinning top. Okay, this is a spinning top. You could have did a quick sale, in, out. Okay, it kept moving sideways, Also another way, look down at the Bollinger Band width. You see how it's laying on the floor? That's how you know it ain't no money. When it ain't no money, you ignore all your MACD signals. You ignore all the candles. You ignore everything that's happening, right? Then when I came in the markets this morning, I saw this. I saw some highs. I saw some tops. I saw this reversal. And then I saw this reversal. So I actually got in a trade twice. I saw this reversal candle right here. After it went up, reversal candle. The next candle was solid red. I did a short and got in and rolled it on down I think today I made about $1,600 today. By the end of the day. So this was just taking a move because I saw I saw the candles. I always be mindful of the candles. Even though it was a squeeze zone, I saw this. When I see a reversal candle, I'm going to take it because candles behavior is always the same. And so another thing that would have confirmed my move to go short is the haul line turned red, and you see the MACD is bright red. When it's bright red, that's the money. The money starting to enter the system. So if you look down here at the Bollinger Band, the money started pushing up. And that's why, and it's going in one direction. So from here all the way down here, and got out and closed, okay? And then it turned around and it pretty much continued the continuation trend down up here. I didn't see a reversal signal, but you could have took it and kept on going down only because that's the way the markets was going. Right here was a reversal candle. So after this reversal candle, there was a hollow green. You do not see hollow greens coming from the bottom band that often, but when you see them, always take them. So you could got in here and basically went up, or if you could stomach it, as long as the whole line was green, you would have kept it open, even though it went way down here, but it ended up going way up here. And then you got out when the whole line turned turned red. Here's another one. This is a spinning top too. I meant to circle this. Another spinning top, which is a reversal trend. Hollow green coming from the bottom band. Could have got in right here. And they literally went all the way up, maybe about what? I don't know, some ridiculous points at the end of the day, at the close of the day. And you usually see these moves about after 2:45 or the last 10 minutes of the trading day. You can see the bulls get into the market and take a move to the upside. So that's pretty much what happened. Really, the money was here. First thing, 8:45, and then this was definitely money. If you can remember what the reversal candles look like from last week trading class, we talked about when you see these, what happens afterwards. You would have caught these too. And so with time and with being able to identify candles, and the more you look and study at the charts, it'll start looking like you where you can kind of predict, but you can't never really predict because you never know what's going on. But you can be a little bit more confident in taking your trades. Now, there may be 5 reasons why you are losing. Number 1, you're staying in a trade that is clearly wrong. I have a 2-tick rule. So that means if I get in a trade and I'm down 2 ticks, immediately I might be in the wrong trade. So I won't go no more than 4 ticks. So after 1 point, if I'm down 1 point, I'm just gonna close out and I can get in the right direction and make up the 1 point. Don't stay in a trade thinking it's gonna come back and it may not. Don't let it go down 3 points, 5 points, 6 points, 10 points, and think you're gonna make it back up when all you had to do is get out and get back in, okay? Number 2, buying in a downtrend and selling in an uptrend. Always be mindful of the trend. Just follow the trend. If the trend is in a downtrend, you only want to take those candles that are solid greens or solid reds from the top band. If you are in an uptrend, you only want to get in when you see a hollow red or a hollow green candle come from the bottom band. Until you are skilled enough to recognize reversal candles and do counter trades. But until you get to that point, just stick to the trade plan. Number 3, lack of discipline, over trading. No more than 2 trades a day. You will love me when you trade live. If you trade more than 2 times in a day, you will eventually start losing. Number 4, you're not following the system. You're not buying from the bottom band and selling from the top band. You're trading in between the bands. Okay? What's in between the bands? Right here. This ain't the top band or the bottom band. It's like right in the middle of the band. If you're taking trades in the middle of the band, you're more likely to be wrong. The best thing is to catch it at the bottom and ride it up. But to take trades like right up in here, no. Getting into trade, getting into a candle at the wrong time. So let's see, you come into the market, you're supposed to buy down here at the bottom band, but you see this candle, you see a long engulfing candle happen, and you buy right here. You don't buy up here at the top. You want to get in at the bottom. You just need to wait for it. If you miss this, just wait for it. Wait for another opportunity to go long. Here's another opportunity to go in long and get in and go up, versus trying to buy here and then it starts to reverse back down on you. So you don't chase a candle. You either getting in at the beginning of a move or you're waiting to the next move. Okay? Trading too big of a position. I tell everybody to practice trade with 1 or 2 contracts only, because obviously to go live, you got to put real money up, and the number of contracts that you can trade is based on how much money you put up. So for most people who start in their new trading accounts, you're only going to be able to trade 1 or 2 contracts at a time. So don't be trading for contracts, because you're going to get in your mindset, I'm going to make all this big money. And then when you go live, you're going to realize you can't trade that many contracts, and you're going to start over trading because you're trying to hit them big numbers. So I want to keep it realistic for you. Also, until you are skilled, I want you to stay around 1 and 2 contracts, because when you lose big because you're trading big contracts. Okay, so stick to the rules. Stick to the rules. This is what I mean by the trend. All you see is red candles. Don't buy. So if you see this going down, don't be looking for opportunities to go long. Just wait for it. You'll get another opportunity to get a sale and go down some more. Okay, just follow the trends. So let's talk about understanding the numbers. So every time you get in a trade and it moves in one direction, that one tick is a 0.25 move. So basically, and it got some in-between ticks too, but a 1 point is pretty much equivalent to 10 ticks. So if you catch 4 points, that's equivalent to 40 ticks. Okay, so for example, if you're doing a short sale, you did a short and you got in position at this price at $27.50. If it goes to $27.50 to $26.49, that's considered 1 point. If it goes from $26.49 to $25.48, that's 2 points. So from here to $24.46 is 4 points. But if you stop in between this number, it might be $27.50.25 or 0.50 or 0.75, okay? But when it's coming to looking at money, I like to look at points. And that's why I, once you go into the live group, they have it set up where you can count ticks, you can count points, or you could just show money. I like points because just by looking at the points, I can tell how much money I made, okay? So again, 4 points is 40 ticks. So for example, if you're trading one contract, you make $12.50 per tick, okay? So if you catch 4 points, you're gonna make $500. If you're trading 2 contracts, you'll make $1,000. If you're trading 4 contracts at a time, you can make $2,000 off of a 4-point move, y'all. 6 contracts, $3,000. 12 contracts, $6,000. 33 contracts, you can make $16,500 after 4 points. And so what you want to do is you want to get good at mastering your points. Like you might not master 4 points. You can master 2 points. Get good at mastering 2 points, because you know as you increase your contracts, you're going to make money. But you want to make sure that when you win, you always win at your system. So get good at winning a certain point count, whether it's 2 points, whether it's 4 points. My personal favorite is to always catch 10 points or more. That's my thing. But it takes time to get to that level. When I first started, I was trying to master 1 point. How can I always get 1 point? And then once I was always able to get 1 point, how can I get 2 points? Then it went to how can I always get 4 points? How can I always get 10 points? Okay. And so obviously to catch 10 points, I'm not over trading. I'm waiting for perfect setups. If I don't see it, I may not trade because I'm waiting for my perfect setup. But either way it go, when it's time to make more money, you just increase your contract. So let's think about the profit potential. And I call this the secret to firing your job. Okay. Now, if you can get good at 10 ticks, if you trade in one contract and you get 10 ticks, you guys, you'll make $125 a day. $125 a day. And if you did it 6 days a week, you'll make $36,000 for the year. If you're trading 2 contracts and you master 10 ticks, you'll make $72,000 a year. 4 contracts, $144,000 a year. 6 contracts, $216,000 a year. 12 contracts, $432,000 a year. 33 contracts, $1.1 million. So what I'm saying to you, it's not about winning big. It's about winning a certain number of points every time you trade, because all you got to do is increase your contracts. But what you want to do is you want to win consistently. And that's why I tell you to track your trades and write it down so that you can see what is your win rate and at what points do you win all the time. Because if you know that, that's what you'll stick to. If you are really good at catching 2 points, don't go for 4 and 10 and 12. Get your 2. Because usually if you're going for 2 points and you try to say, well, I'm going to stay in here and I'm going to get 10, you will end up losing all of it. So master what you are good at and then just keep doing it over and over and over and over. And when you see your perfect setup, you take it. You take it. Okay? So you have the ability to replace your job income, but you got to have enough discipline to follow your system, because you don't want to win and then turn around and donate the money back to them. I want you guys to be consistent winners. That way you got checks in between paychecks. Can you imagine making 6 figures day trading from home? You can do it. Hell, I make 6 figures day trading and another 6 figures with my econ. You can't go wrong. My econ money, my play money. I don't have to live off my econ money. That's my trading and investing money. And so you want to get to a point to where you're doing that. That's why I tell you guys, build your my econ business at the same time you're learning how to trade. It shouldn't be either or. You need to have multiple streams of income. And at least with building your business, you get leverage. So you make money off of other people's efforts. If you get sick and you can't trade for the day, you don't make no money that day. So you still want to have different flows coming in. So it's not a choice of one or the other. It should be both. Because people who are just day trading for a living and that's all they do, they still only got one source of income. Operation account accumulation. So my favorite part, we're about to go into our profit zone contest. So that means that those of you who went through the whole 4 weeks, you have been doing your practice trades. But some of y'all who have already been in this class and you are going on month 3 and 4 and 1 year or whatever the heck, you finna go into the contest. And so what's finna happen is for the next 2 weeks, we're done meeting. So we're not gonna have any more classes after this. But the next 2 weeks, all you're doing is trading. And you are going to send me a screenshot of the account balance by Sunday. So by Sunday, I need everybody to send me a screenshot of the balance in their trade account. And for the next 2 weeks, you are going to do practice trades. And I am going to see where your ending account balance is going to be after 2 weeks. What I want to see is growth in your trade account, because if you got growth in your trade account, that demonstrates you have the ability to trade. And if you have the ability to trade, you can come into the live group where you can trade real money. Okay, but I don't want you in the live group if you ain't ready to trade live. Okay, so this ain't I just want to get in the live group. No, 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 no. You need to know how to trade, because when it's live money, it's live money. You lose, you lose. So it ain't no paper count, right? And so take this serious. Now, people who just joined in, you wasn't here like at the beginning of the class, I still want you to take the contest, but you're not set to that 2-week practice time. Okay, you can go longer than that. You can rewatch the videos, because the training is still the same. No matter how many times people take the class, the training is all the same. Every once in a while, I might say a little something a different way, but it's still the same. So what I want you guys to do is to go back to video 1 and start watching it over again and keep taking practice trades. If you are getting hung up on something, make sure you reach out to me so that I can see what you're doing wrong, and I can give you advice and I can help you. I can't help you if you're not taking any practice trades. Can't help you if you're not trading. You got a paper account, so there's no reason why everybody shouldn't have taken a trade. You're not gonna win every trade. That's okay. Okay, so just be mindful of that. And so I'm ready. So on Sunday, everybody send me their screenshots. The contest is gonna go from April 6th to April 20th. Continue to do what you've been doing. When you win, drop your pictures in the group like you've been doing. And then on April 20th, you're going to send me your screenshots. And then that Thursday, we'll meet again. I'll tell you guys who is the winners and who are going to be going to the live group and who should stay and run the cycle again and continue to practice trades. So again, you're under no pressure. You get to advance at your own pace. And so if you new, don't be worried. I just need you to keep practice trading. Okay, and so again, to be able to trade 2 contracts in the live group, you're going to need a minimum of $1,000. The futures is like a whole nother game. When I teach Forex next week, it has a lower price point. You actually can get into Forex and trade for as little as $250 is where people should start in the Forex market. So you will be able to leverage both and make money either way. But the futures market is $1,000 minimum to open up your trade account. That's going to allow you to trade 2 contracts at a time. If you got $2,000 in your account, then you can trade 4 contracts. So you can start with like $1,000, grow your account up. Then when it gets to 2,000, then you can up your contracts. You could trade 3 contracts. You could trade 4 contracts. When your account balance has 3,000 in it, you can trade up to 6 contracts at a time. If your trade account got 4,000, 8 contracts, and as you can see, if you want to trade 33 contracts at one time, where you're making $425 per tick, you're going to need $16,500 into your trade account. Okay. Me personally, I have about, I think I got like 13,000, about 14,000 in my trade account right now. So I don't trade 20 contracts at a time. I trade lower contracts so that in case I do make a wrong move and it goes way out of control on me, I have enough money in my account to take 1,000-point drop, and it still won't take me out my trade, and it'll take me back to where I needed to go. Okay, but that's something that you're going to grow to over time. And then I do have my setup where when I make so much money, I'll move it out into my bank account and play with just use the win money to trade, you know, and take my investment out. So, so again, let's go. Send your screenshots on Saturday. I want to see what's your growth. I want to see, take it serious, you guys, because what I'm telling you is that if the markets do get worse, the economy do get worse, a lot of you may lose your job. So I want to make sure that you do know how to trade. So in case you do get laid off, you have the ability to make some money from home. So I need you to take this serious. Be stashing your cash, okay? So that when you're ready to go live, you got the money to go live. You don't have to have it right now, but whenever you are ready to go live, you want to have it. So you want to make sure that you saving and preserving your money, keeping your income shift so you can always fund your trade accounts, all right? Okay, so get started. Send me y'all screenshots on Sunday. Y'all trade starts Monday. So it's going to run from Monday for 2 weeks. And then after that, the winners are going to go into live. And then I did say I was going to go into a Forex class. So I'm kind of going to be running in between Forex and futures. And then when I get done with the Forex class, I'll probably come back and run this futures class again with you. But either way, if you're not, even if you're not ready to go live, you continue to take your practice trades, you continue to interact with me and tell me what you need help on so that I can help you. Okay, again, the key to financial freedom is wisdom and discipline. And the wisdom and discipline is following a trade plan that I'm telling you. And then the practice is going to give you the discipline so that when it's time to get real money, you guys going to be ringing the cash register. Y'all can have $1,000 days. When you master it, you can have $1,000 days. Okay. Can you imagine having $1,000 day 6 times in a week? It can definitely happen. It could definitely happen. But again, like I said, you're gonna have to practice. Just to look real quick at the markets right now, just to see what is happening. Oh, let me move over some. Okay. I am actually looking for the markets to go back and test the bottom. I wanted to go back to here and go down, go back and test the bottoms. That's what I want to see. So obviously if you guys were trading, let me look at this and pull this up a little bit. Okay. The MACD has not given a short signal. Look at here at the bottom. Okay, so what you notice at the bottom, you see this? Ain't no money in the system. And it's probably like 5, 6 people in the markets doing this, y'all. I don't trade at night. What you can see right off the gate is if you're looking at the 5-minute chart, it's moving sideways. And so clearly if it's moving sideways, I wouldn't be taking no trade. If you look over in the left-hand side, you'll see that it's still in an uptrend because the candle is still green. It's actually a solid green. It looks like it keeps messing around this 200. I want to see it drop some more. So I love red. So it's moving sideways. So when the market is moving sideways, it's just going to go up and down between the top and bottom band. Okay. It ain't no movement in the market. You would need this line to start pulling up just a tad bit to get it to push all the way down to this purple line. So it's kind of going to go up and down, up and down, up and down, up and down until some volume push it in one direction. The last MACD signal is right here. But as you can see, it's dark green right here. If you look at the Bollinger Band percent, this number is under 50. When it's over 50, it's moving to the upside. When it's under 50, it's moving to the downside, okay? Right now, it's still under the 50, but the market is moving sideways, so it's going to do what it's going to do, okay? So there's no move to really be made because it's moving sideways. If it started going to an uptrend, you're going to be looking to buy from the bottom band. If it started to go on a downtrend, obviously you want to be selling from the top band. This pushed out just a tad bit right here. So if you would have been in a sale position, you would have been in a sale position up here because this was a solid green candle and it came from the top band. So you would have did your short here. Now, mind you, it's green. So you always want to be paying attention. But even though it was green, the whole line is red. So you could have stayed in your position and went from here to here. And then when it started to create this long strim, you could have got out and did a quick scalp. Me personally, like I said, I'm looking for it to fall back down under the 200 and keep going. But the markets are real slow right now, so I wouldn't be trading. But you all know what to do. What I'm looking to happen is that the market will continue to maybe go down because it was at 44 and see now it's at 35. I would love for it to go back down to the bottom line, which is like the 1 or the 5 or so. And as it continue to go down, this candle will continue to form. I believe it's probably going to make its way to a pivot point because the natural thing is for candles to go to a pivot point. And then it's going to go on a pivot point and then it's going to stall. And it might pull up a little bit, but we will have to see. Right now, there still isn't a lot of volume. You could have scalped, but it's a lot of volume. But if I would have got into the trade, it would have been right here. It'd have been right here. So I'd have got in here, and that gave me room to catch all of this versus getting in right here and hoping it pushed down some more. What I'm not going to do is get in down here at the bottom, even if it do push down. I'm not chasing candles because what I know is if I get in the bottom right here, if it hit this, it probably pull up a little bit. So you always want to be able to maximize your trades by paying attention to the bands. You get in up here and you leave it open as long as the whole line is red. So you could have went from here and got in down here. I'm not getting in down here. I only get in at the top band, okay? Same as when you buying. You only buying when the candle is closer to this bottom band and it's hollow, coming from the bottom band. That's when you buying. You want to buy low so you give yourself a chance to catch a move. You buy high to give yourself a chance to catch a move. I'm not buying down here. If you buy down here, you're chasing a candle. Now, I'm not saying that you might not catch a win. Yes, you might catch a win, but that's not the appropriate way to take the trade. You don't want a hope it goes there. You want to know for a fact it's going to go there so you can maximize your profits. That's why you buy here. You buy here. I mean, not buy, I'm sorry, you short here. You're going to short up here and leave it open. And this was a good move. This was 2503. And this is 2496. So you had a good move right here. You know, y'all could have made $100 real quick if you got in, especially if you got in at the top. Okay, look, now the Bollinger percent is down to 23. Pay attention to that. When it's under 50, it's letting you know it's going down. And you probably won't see a MACD signal to short unless it breaks through this area. If it breaks through this area, you're probably going to see a MACD short signal. See how I told you it get close and then it'll push up? But what if you short it right here at the bottom of a candle? Because you're assuming it's going down. Now, I believe it's going to go down eventually, but it's still assumption. You don't trade based on assumption. So you short it right here, you in the red. That's why I don't chase candles. I just get in the right position. And that gives you time to make money and see where it goes. Watch it go to the here. Eventually it's going to go here. And at some point, it's going to touch that candle. Come on. They be so slow. And let me see how many people out here. I guarantee you it's only a few people out here. Okay. There's a couple of people out here. It's not, I saw a big 53 number. When I saw that 53 number, they probably was doing it. But let's say I'm going to do a buy. And I'm going to do a buy because it hit this, let's say it hit this this line. Usually when it hit this line, it usually bounce back up for a little bit. We finna see if some volume come into the marketplace. Oh, is it breaking through? What is it gonna do? Give me some green. Y'all, it's like 8 people in the thing. When it's 8 people, they be playing. Like they'll see your trade out here and they'll try to trade against you because it's 8 people. I like to trade when it's thousands because they ain't paying no attention to you. So we'll see. Uh-oh, more people and jumped in right here. More people and jumped in. Right here, these are trades that is out here in the marketplace that people in place before the market's closed right here. I'm down $25. Glad this is paper money. But I'm not supposed to be trading. Y'all know why I'm not supposed to be trading, right? The market say sideways. I wasn't supposed to be trading no way. So see, this is a perfect example how you lose money when you don't listen to your trade plan. But usually when it's a lot of people in the market and it hits this support, it will reverse back up and give you a quick move to the upside to where you probably can catch 1 point, 1 or 2 points off of this support line. But because it's such a small amount of people in the marketplace, they're actually playing and trying to make it, even though I'm paper money, so they really not making money off me, but that's usually what happens. Let's see. Now, I wanted to push down because I wanted to go back and test them lows, not for this trade, but for another position where I want to get in for the long haul. I wanted to wait for it, but I'm finna wrap up this class. Come on, give me some green. Give me a little bit of green. Ah, finally. Oh, come on. Come on and give me some green and quit playing. All right, give me some green. See how fast that happened? I didn't even get a chance to hit my flatten button. Now, what I do like about the other system is that you can get in and out of trade so fast. With Thinkorswim, you know how you got to get in the trade, you got to hit the confirmation buttons and all that. You ain't got none of that. Oh, it's going the opposite direction. It is. And you see how it broke through? Remember I told you when it break through this line, then you'll see the haul to the downside. Come on. Oh, I'm sorry, y'all. This is bad for me. Wait a minute. I need to get out this trade. Oh, I need to get out this trade. My bad. Wait a minute. What did I just do? Okay. Oh, it's going down. Come on. Come on and get me out of this. I did a reversal. Don't do this at home. I hit the reversal button because I was trying to catch that trade to the downside so that my loss wouldn't have been a whole $100. But I'm gonna go ahead and don't ever do that unless you're good. I got out. But they did have, when you do get into a live trade, they do have a reverse button where they'll put you in the opposite direction of what you in. But in order for the reverse button to work right, when you switch over, you got to catch enough points to cover what you were off before you hit the reverse button, and then you'll go into the green. I guess had I stayed in it, it would have went into my favor the way I wanted it to. But I want y'all to do buy and sell. When you get in advanced class, we talk about reverse and how to use a reversal. And a reversal is when you know you're in the wrong trade, you can hit reverse and it'll put you on the right side. The key is not to do it after you down 2, 4, 5 points. You do it when you off maybe 2 points, you know you're in the wrong direction, hit reverse and get in the right direction. But again, I don't want y'all practicing that right now. I want y'all to just focus on buy and sell. Okay, let me get my butt out of here. Ain't supposed to be trading no way. It's sideways. So y'all don't be following me. Even though I think it may go down a little bit more, but who knows? I'm done. I'm tired. I lost $75 in paper money just that quick. I was down more than that. If it didn't have all those confirmation buttons, I would have only been down $50. That's why I like the other system, because it's one button in, one button out, and that's it. I can be in and out like that. So, whoo, Lord, all right, y'all, I'm tired. I'm going to bed. But y'all send them balances to me on Sunday. Be ready for the contest on Monday. Mike Macklin, I'm going to be watching you. I'm going to be watching you. Don't get nervous. Don't get nervous, because you've been doing good all this time. I'm ready for you. I'm ready for you, okay? And then next week, Wednesday, we'll jump into Forex. Y'all can learn it at the same time, because y'all know how to trade. If you know how to trade futures, you can trade Forex. It doesn't matter. It's just that Forex is a lower threshold and lower money. And so what I'm going to do on the Forex side is we'll talk about currencies, but I'm going to, the first time I did the Forex class, I just stuck to currencies. This Forex class, I'm going to go currency, but I'm going to teach y'all how to trade indices on the Forex side. So just how we trade the S&P and futures, I'm going to teach you the S&P on Forex. So if you can master them, you can actually run them. So what I do is when I'm in the trade on the futures, I place the exact same trade on the Forex side, and I run the numbers. Okay, so that way you can make double the money at the same time. Then I put a lot of money in Forex, so I can run them up. So it can happen. So Alicia Watson, when you get over here in that Forex side, I'm gonna show y'all how to trade Forex for your phone. So y'all can be posting y'all little wins and stuff on social media, because y'all know people nosy. They're gonna want to know what y'all doing and all that stuff. Okay. But I wanted to teach y'all futures first, because it was the hardest. And I felt like if you can master futures, you will kill Forex. Forex is small pennies compared to futures. Okay. So, all right, y'all. I will see y'all later. Y'all not gonna see me for 2 weeks. And like I said, many of you already on the Forex side, so y'all see it when I drop the class for that on Wednesday. And if you're not on the Forex side, just shoot me a message in Messenger, and I will add you to the Forex side. All right, y'all. I will see y'all later. And good night. Have a good weekend. Make sure y'all stay safe. Stay in the house. Stay in the house. Ain't nothing going on outside. Stay on in the house. I'm an introvert. I'm loving this. I don't have to be around people. So this is like the best time of my life. So stay in the house. All right, y'all. See y'all later. Good night.